Tonight on Newsnight Scotland, the housing crisis arrives north of the border. Until recently, we were asking, can we escape the worst? Now the question is, how long will the worst last? Good evening. Well, every day just now brings more bad economic news, and today's was, if anything, more alarming than usual. The Bank of England warned the mortgage market will dry up even further over the next few months. Mortgage lenders added they were surprised by the number of people defaulting on their payments. To add to the gloom, the house builder Barratt said it might sack up to 1,000 of its staff. It comes in a week when a house price survey showed prices in Scotland falling for the first time. So can we now put aside arguments that Scotland can somehow escape a global financial crisis? And how bad will it get? Here's Gillian Miller.
The turmoil in the UK housing market is rarely out of the headlines. But Scotland, we're repeatedly told, seems to be bucking the trend.
The big question now is, will the market in Scotland track England and see significant price falls? Or is the market in Scotland genuinely different? At the moment, the signs are that the market in Scotland is different. That's not to say that we're going to avoid a fall in prices altogether. They may or they may not happen. But there's a growing body of evidence to suggest that if we do see a correction in prices here, it will be a lot milder than is currently being seen south of the border.
But is this just positive spin? Let's consider the evidence. The number of houses sold in Scotland in April 2006 was just under 9,500. For the same month a year later, sales rose to more than 10,500. But in April this year, whilst there was a rise, it was very small, less than 100 extra homes sold in that period. And of course, trends in recent weeks suggest this will have slowed again. When it comes to mortgages in Scotland, almost 10,000 were approved in May last year. But in May this year, that figure was down markedly to 6,500. That's a drop of 34%. Whilst researching this film, I've spoken to developers, builders, solicitors, many of whom have been happy enough to tell me off-camera tales of workforces being laid off, sites being mothballed, and in the case of one developer, no potential buyers in recent weeks setting foot through his multi-million-pound development of flats. In fact, he didn't want to take part in the filming because he said very soon he would be on bended knee to the lender, and he didn't want to do anything that might jeopardise securing future funding to keep that venture going. One person who's had a measure of the changes in the industry in recent months is builder Alan Carberry. He's managed to keep his venture going by diverting into the likes of this loft conversion in Glasgow after work in the new build market fell away.
I had orders in from other companies to supply them with joiners and give them prices for jobs for the next year or so, and then I got word that the job wasn't happening from one job, and then maybe another job came in. Well, that job's been shelved just now as well. We'll be putting that job off, and as I seen it happening, I just automatically moved into other areas. Maybe I've seen it before 10, 15 years ago.
So who is most affected? Well, sales of new build flats in cities like Glasgow and Edinburgh have been badly hit. They traditionally appeal to first-time buyers, but with mortgage deals for them all but dried up, they can't buy, and in turn others up the chain can't sell and move on. The banks are constrained, and it's constraining the market.
What we're doing with the banking community is working to find ways to present new shared equity products, to provide mechanisms to underwrite part exchange schemes, for example, and to deal effectively and transparently with any incentives that are offered so that the banking community continues to have confidence in our sector and offers legitimate and worthy products.
And our habits are changing. The way Scots now buy and sell their homes has turned on its head.
This time last year, sellers were saying, I'm not going to put my house in the market until I find something to buy because the choice is relatively limited and I want to make sure I've got a house before I sell my own. Now everyone is saying, I want to make sure my house is sold before I submit an offer for another house. The consequence of that has been that, in fact, the number of properties for sale in Scotland has risen quite significantly, and GSBC's current stock of property is at an all-time high.
The foundations have been laid for this development of new homes in Ayr. It's at the niche end of the market, and in recent weeks alone the developer has sold 6 of the 24 homes off plan. Evidence, he says, that there is still much demand for new homes in Scotland despite the slowdown.
Scotland is in probably a better position than England in terms of a lot more larger privately owned construction companies and house builders. So from that point of view we can be a little bit safer in terms of where we stand at the moment in the market. I think what we've got to look at now is a more balanced view being taken by the media and try and look at where the positives are in the market and where the good things are happening.
And what will be the long-term implications for Scotland if the number of new homes being built continues to fall away? Well, annual government targets won't be met for one thing.
In the short term, it won't be possible to increase housing output. However, in the long term, it's absolutely essential that we do so, simply to meet the base demand that exists as new families are formed in Scotland.
So what for the future? Well, the Scots, it seems, are more insulated from financial shocks than most, traditionally borrowing less for their home, spending on average 17% of their income on paying the mortgage, compared to 18.5% for the rest of the UK. And house prices here have tended to rise more slowly than down south.
We believe that the current market conditions will continue to be difficult for some 12 to 18 months. And indeed, if the wholesale financial markets remain closed until the tail end of this year, effectively to business, then it could be that we have a 3 or 4 year problem.
A startling 3 million people in the UK are relying on equity release from their homes for their pension. Property used to be seen as a long-term investment, something many of us seem to have forgotten. So there is evidence to support that Scotland's housing market has not slowed to the same extent as elsewhere, but its revival will be dependent on how the rest of the UK fares in the coming months and years.
Gillian Miller reporting. Well, I'm joined now by Cliff Dunn of the National Association of Estate Agents. In our Essex studio is Jonathan Davis, Managing Director of the financial planning company Armstrong Davis. He also speaks on behalf of the website housepricecrash.co.uk. And also with me here in Glasgow is David Bell, Professor of Economics at Stirling University. Well, Jonathan Davis, what's your view of what is happening to house prices now and what's likely to happen over the next year or so?
They are falling rapidly. Transaction numbers have melted away. Prices nationally will be down 10 to 15% this year and approaching 10% in Scotland this year. And the market will be negative for at least the next 2 or 3 years, possibly 4 or 5. Prices by the end of it will be down 30 to 40% from the high.
And how do you arrive at all those figures you've just given us? Because no one really seems to know.
Well, so far I have to say my forecasts have been very accurate since I started making them on the BBC in the summer of last year. If you look at America, California, Florida, Australia, Spain, Ireland, Netherlands, South Africa, New Zealand, you name it, they're having a huge house price crash. We have an economic slowdown. We have the biggest financial slowdown in the financial centres that we've had since the 1930s. Credit has just dried up absolutely. Take the example that globally the banks have lost $400 billion. Now, when a bank makes $1, it can lend $10. But when it loses $1, it has to restrict its lending $10. That means there's $4 trillion less lending in the global economy than there was.
All right.
This has got a long way to go.
And presumably you wouldn't give much credibility to this idea that somehow Scotland is insulated from everything you've just described.
It's an amazing thing, but everyone tells me that their area is insulated, whether it's London or Oxford or Cambridge or Scotland or Edinburgh. Nowhere is insulated. Everywhere had a 2, 3, 400% rise in the last 15 years. Therefore, everywhere will be affected.
Well, Cliff Dunn, when we got the nationwide survey this week,
yes,
everyone's been saying for months, oh, Scotland's different. It turned out not to be so different, didn't it?
I don't think the figures are too surprising, are too worrying, to be honest, for Scotland. In real terms, property values in Scotland have actually risen in the last 12 months, and we have to be very careful indeed that we don't talk ourselves into depression.
Yeah, I take your point about talking ourselves into depression, but frankly, what you see now about house prices is not going to do anything at all to affect a global financial crash, which started off with lending on properties in Iowa. I mean, you know, so we might as well just be honest and upfront.
Totally understand. We're not in control of everything. There's no doubt about it that the UK banks...
But if we're not going to talk ourselves into recession, what basis do you have for saying that somehow or other Scotland could be less prone to the kind of factors which Jonathan Davis has just described than anywhere else? As he says, everybody in their own area thinks they're going to be immune.
Well, the reality at ground level, we run a practice in Glasgow, and I think it's fair to say that there has been an accountable slowdown over the last 6 weeks or so, but the reality is that we are still selling houses, and there is still very much a demand for property.
Yeah, but it looks, to all intents and purposes, like everything else about the economy in Britain, that Scotland, there's a time lag. It doesn't look anything more or less than that.
Well, time will tell if there is a time lag. At the moment, it certainly looks to us as if we are weathering the storm.
David Bell, the argument that somehow Scotland can weather the storm would be more credible, wouldn't it, if this was, as it were, a normal recession, that it was all just about people had overstretched themselves because we don't tend to spend so much money on housing. Yeah. We hadn't done it as much as in the South East. But that's not what's happening here, isn't it? It's a very rapid evaporation of credit. Yeah. And it doesn't matter if you're trying to get a mortgage, whether you live in Edinburgh or whether you live down near Jonathan Davis in Essex.
I think that's true. I looked at the data quite carefully before I came here tonight, and it is absolutely true that Scotland does stand out. If you look at the period since 1970, Scottish house prices are 40% less volatile than those in the rest of the UK. Now, what Scotland can't do, though, is isolate itself from this collapse in credit. And it's certainly the case that, over the next 3 months, things are going to be extremely tight as far as bank lending is concerned, and that is just going to constrain the activity in the housing market. And construction industry is going to suffer, a number of ancillary industries are going to suffer, and the question is, when will a recovery take place, if at all? I think it will take place at some point. The question is when.
Well, the question is when, because if we're talking about what is in effect a wholesale restructuring of household expenditure in the UK, as well as a wholesale restructuring of the entire banking system, those things are not like the dot-com crash, where a few companies get wiped out and the economy picks up. That takes time, doesn't it?
Yeah. I mean, there are two reasons why the banks are not lending. One is they're changing their attitude to risk. And the second reason is that they're thinking that the economy is going into a downturn. Now, the economy will pick up, but the banks are going to be, from now on, much more risk-averse. They're going to be less willing to take on customers who are at the edges of affordability as far as mortgages are concerned. So we will not have a repeat of 2007. If the market rises and people still make capital gains out of housing, it will be at a much more modest rate than it's been in the past. And just one other thing to say about the UK as a whole compared with Spain or compared with the US, we do not have an excess supply of houses here. There is, as your VT showed, a demand for housing, and that will continue into the future.
Right. Jonathan Davis, just picking up from that point and about timing, how far out do you think we need to look? And what people are starting to say, aren't they, is that even when we get out of this house price recession and economic downturn, because no doubt in the future bankers who earn millions and millions of pounds a year will forget all the lessons of this and start doling out money like there's no tomorrow. But at least for a few years they're going to be a bit more cautious. Therefore, what people are starting to say is you're not going to see house price rises as we've seen over the last few years for a very, very long time.
Bankers aren't more cautious now. They've shut up shop. There is no lending going on per se. The Bank of England figures tell us that mortgage approvals for house purchase are down 2/3 from last year. And this myth that Professor Bell said about there's more demand than supply. We all want to live in 5-bedroom detached houses with an acre of land, but if you can't borrow the money, you can't buy the property. And Rightmove's Co-UK, the biggest website advertiser of houses in the country, tells us, it's an estate agency, tells us there's 15 properties for sale for every buyer in the UK. And finally, if I may say, they also say that the average number of properties for sale in estate agencies is 75. And that's the same, it's the highest in history, and that's the same as you'll find in practically every estate agent in Scotland.
Well, Clifton, I mean, that's the point. I mean, it may well be the case we don't have the same problem with an excess supply of, of housing that they have, say, in the States. Yeah. But as Jonathan Davis says, in a way, that's the old way of thinking. This is a different kind of crash. This is a complete evaporation of credit markets.
It is, but if we look at our own figures for last month, for example, I think that suggestion of an average number of stock, 75 units, is probably actually very, very accurate. If we look at our own business, we sold a third of them last month.
Right.
So the stock is actually turning round, but at the correct asking prices. And that's the vital thing at the moment.
Is there a need for the government to step in here, David Bell? I mean, we're seeing something quite extraordinary happening, not just in the housing market, but in the general economy. Yeah. And basically, as far as I can see, all the government's done is said, we'll appoint some chap who used to run HBOS to have a look at it and set up a working committee, and that will report sometime in the autumn.
Well, I mean, the Council of Mortgage Lenders today have asked for more liquidity to be injected into the system following the...
Sure, but even Alistair Darling, I think, today was saying, look, injecting liquidity in the system may have an effect eventually, but when there is no interbank lending market at all, injecting liquidity doesn't make the blindest bit of difference.
Yes. Clearly, banks are in a major problem of having to rebalance, their assets. There's no question about that. They had much too much risk. But at the end of the day, they're in business to make money, and they make money by lending. So once that adjustment takes place, and as I said earlier, they will be taking a different attitude to risk. But once that rebalancing takes place, we'll be back into a more sensible credit market, and there the long-term trends will start to have an effect, and the long-term trends is that in Scotland we need more houses.
This description of what has to happen, Jonathan Davis, I mean, again, obviously, at some point the banks will restructure their balance sheets. But is that going to happen anytime soon? Because everyone, I mean, look at the rumours in the market this week. Basically, the markets have been yo-yoing around on fears that, in America in particular, things in the financial industry are about to get a lot worse rather than a lot better.
Absolutely. The banks globally and locally have lost absolutely astronomical amounts of money because of ridiculous lending and indeed ridiculous borrowing. You take the value of bank shares in the US, they are literally already 65% down on the early part of last year, and in the UK they're about 60% down. They can't lend. They haven't got any money to lend. They're taking in money because they're recapitalising right now. They cannot lend. They need money in their own accounts.
Right. I'm interested in your view on whether the government could or should be doing something to address this. More than they have done. Obviously, they've injected liquidity into the banking system. But for example, specifically on the housing market, should they be doing something?
Sure. The question does make me think of you land in a middle of a field in a hot air balloon, and you ask the farmer there, how do we get to the village? And he sucks and he says, well, they wouldn't have started from here. The fact is, they allowed indiscriminate lending and borrowing over the past few years, and the money supply growth has been absolutely ridiculous, and that's why we have now a succeeding crunch. The only thing that the government could possibly do to sort out the housing crisis, and I can't imagine they're going to do it, is nationalise the housing stock. And I know that sounds ridiculous, but believe me, there's nothing else they can do. If the Americans can't do anything to sort it out, and the other countries in Europe and across the world can't, then Britain certainly can't with our fiscal situation.
All right, Cliff Dunn, is there anything you'd like? I mean, being on the sharp end of this, having to sell these things, is there anything you'd like to see done?
I think the public would like to see some sort of action taken from the government with regard to stamp duty, quite frankly, and possibly putting a freeze on it for maybe the next 12 months.
Yeah, I mean, I take your point, but the trouble is, isn't there a sense in which the scale... I mean, I read somewhere the other day that because of new buyers can't get mortgages, first-time buyers, that even if prices fell by 20-25%, because you can't get a mortgage without a huge deposit, they still wouldn't be able to afford houses. So therefore, it's difficult to see that changing stamp duty, which would affect things at the margin, but it's not... Wouldn't really address the scale of this, would it?
I think some people are certainly looking at the different ways of borrowing capital. There was a scheme recently through the Bank of Ireland where 100% mortgages were available based on 20%, which was under guarantor by friends and family, and people are certainly doing these things at the moment.
Very briefly, Jonathan Davis, do you think we're obviously having a house price recession, but do you think there will be an economic recession?
Technically, I couldn't say, but, you know, the slowdown that we're experiencing will be worse next year, and it will feel like a recession. Capital Economics, one of the big independent economists, astoundingly, they forecast an increase in unemployment by 2010 of 1 million people.
All right. David Bell, on that question, do you think there's a recession, a possibility, a probability?
I think there are pretty serious problems at the moment. Construction,
Very
services, manufacturing a little bit better, but overall it isn't looking that good for next year.
There may be a recession.
It's possible.
All right, we'll have to leave it there. Luke, thank you all very much indeed. A quick look at tomorrow's front pages, starting with the Scotsman. There it is. Carrier jobs joy, but is the cost too high? This is the story about the new aircraft carriers being built largely in Scotland. And the Herald leads with the story that MPs today snubbed the proposed reform of their John Lewis list expenses. That's all from me this week. This programme's on the iPlayer. Good night.